Welcome to The Explainer. Today, we're digging into CarMax's recent Q2 earnings call. We're going to focus on what the CEO, Bill Nash, had to say and break down his game plan for what was, well, a pretty tough quarter.
All right, so let's just jump right in. The call kicked off with a surprisingly blunt admission about how things have been going.
Wow, talk about getting straight to the point. No corporate jargon, no beating around the bush. Right out of the gate, CEO Bill Nash just laid it out there. The numbers weren't good. And that really sets a tone of, okay, we know there's a problem and we're here to talk about it.
So, what does fell short actually look like in numbers? Well, here it is. Total retail unit sales, the actual number of cars they sold, were down 5.4% from this time last year. That's the core of their business right there.
And when you look at the actual dollars and cents, you can really see the impact. That drop in cars sold meant a 6% hit to their total sales. We're talking about a slide from $7 billion down to $6.6 billion. That's a big deal.
So the big question is, why? What happened? Well, according to the CEO, this wasn't just some random slump. It was more like a chain reaction, a two-part problem that actually started before the quarter even began. And here's the 1-2 punch that did the damage. First, you had all this talk about potential tariffs, which made a bunch of people rush out and buy cars in the first quarter to get ahead of price hikes. Then, the market took a weird turn, and used car values suddenly dropped by about $1,000 a car, which totally messed with their pricing. Let's talk about that pull forward thing for a second. Think of it this way. Everyone who was maybe thinking of buying a car in April, May, or June suddenly decided to buy in March instead. So when the second quarter actually arrived, a lot of their potential customers were already out of the market. It created this sort of sales vacuum. So what did CarMax do about it? Well, they didn't just sit there. They got proactive. They started cutting their own profit margins to make their cars more attractive and move that inventory. And at the same time, they hit the brakes on buying new cars to get their lots back in balance. Okay, so that's the what happened. But honestly, the more interesting part of the story is the what's next. The whole conversation then pivoted to their strategy for turning things around. And this is it. This is their 4-point game plan to get back on track. You can think of these as the 4 pillars of their comeback strategy. So let's break them down one by one. First up, it's all about getting back to basics. Job 1 is simple. Get the pricing right and make sure you've got the cars people actually want to buy. Good cars, fair prices. It's the foundation of the whole business. Next, they've got to get the word out. CarMax feels like their blend of online shopping and real-life stores is their secret weapon. The plan now is to shout that from the rooftops, to make sure everyone knows about their unique way of doing things, from the first click on the website to the final handshake. Priority 3 is about tightening the belt. They're going on a major efficiency drive inside the company, using technology to trim the fat and just get smarter about how they spend money. The goal is to make the whole operation leaner and meaner.
And they're not just talking in vague terms here. They put a number on it, a big one. They are aiming to cut at least $150 million in costs over the next year and a half. That's a serious target. And last but not least, they're looking to make money from more than just selling cars. It's about squeezing more profit out of the other parts of the business, like their financing division, CarMax Auto Finance, and their service plans. It's a smart way to diversify. Okay, so let's circle back to that second point, getting the word out. Because this isn't just some memo floating around the office. No, this is a full-blown, public-facing marketing push. So near the end of August, they rolled out this brand new campaign called Want to Drive. The whole idea is to really hammer home what makes CarMax different, putting the focus squarely on the customer and their experience.
And check this out. This is the why behind that campaign. This isn't just a gut feeling. They have the data. Their Net Promoter Score, which is just a fancy way of saying how happy are your customers, is the highest it has ever been, especially since they brought all their digital tools online across the country. People are loving the experience.
So, you've heard the problem, you've heard the multi-part plan, but what's the bottom line? How do they really feel about the future after all this? This quote really says it all. Despite the rough quarter, the CEO is basically saying, we got this. He's confident their plan will lead to some serious earnings growth. We're talking high teens, as soon as they get car sales growing again, even just a little bit. So if you boil it all down, what's the big message here? It's really about doubling down on what they do best while also getting leaner. They're making the company more efficient and more flexible, but they're building on that foundation of a great customer experience, which has always been their thing.
And that really leaves us with the million-dollar question, doesn't it? CarMax has a clear plan. But let's be real, the used car market is a battlefield. It is super competitive. So is this focus on efficiency and customer love going to be enough to win? It's going to be fascinating to watch.